You have 200,000 Kenyan shillings and you're asking yourself, where can I invest in to maximize my returns? Now, I'm going to show you a criteria that you can use to do a self-assessment. And in case you need a consultation, I can help. One thing that you must note is that if you're looking for an investment that you're going to maximize your returns, then you must be willing to take the risk. That is, if it's a similar amount of money. If you want to maximize your returns on these 200,000 Kenyan shillings, you have to take a very, very risky investment. Otherwise, if you're asking the question of you want to invest in a place that is less risky and maximize your returns, it doesn't work that way. At least I think it doesn't work that way. I stand to be corrected. Now, the first question that I'm going to ask you, if you ask me this question, is, are you employed or are you not employed? Because if you're employed, there are certain investments that you can't do based on your capability. For example, a business, especially a demanding business that requires your time to manage. Unless you're now willing to employ somebody else to do that for you. But then it depends on the dynamic. So if you are employed, sometimes you might say, I don't want to invest. I don't want to do a business investment because it's going to require much of my time and monitoring. So perhaps a business may not be good for you. It depends on the business. But if it requires most of your time, then for an employed person, it might not be the best investment for you, since that's the question. If you're not employed and you have 200,000 Kenyan shillings, and this is the only 200,000 Kenyan shillings you don't have any other 200,000 Kenyan shillings, you can use it to improve on your skills, to work on your skills, such that with the skills that you have, you can be able to generate income. So it can be personal investment or it can be another investment. But for somebody who's not employed and they got 200,000 Kenyan shillings, let's say from a lottery, then you putting this money in a very risky investment is risky for you since you don't have any other source of income. But at least if you're employed, if you use these 200,000 Kenyan shillings to do a risky investment, you can have income that is going to supplement you in case the risky investment doesn't work out or takes time to work out. But for somebody who's not employed and this is the only money you have, then a very risky investment like shares might not help you because you're going to be getting cash flow once a year or twice a year, but you need to survive. So this is one of the questions that you must ask yourself. The second question that I will ask you is, what's your level of risk? With the question that you asked me, where can I maximize my returns without taking in too much risk, like low risky investments? Then for you, in this case, a business is a risky investment in as much as if it works out, it's going to bring you most of your returns. If it works out, again, it depends on the dynamic of the business. I don't have authority over business content, but I can tell you based on what I've seen, a riskier investment in business will give you more than a less riskier investment. Let's take, for example, you have 200,000 shillings and then you put it in a treasury bond. So I'm just going to use like a rough estimation. This is just a rough estimation. If you make an investment worth 200,000 Kenyan shillings worth of value in a treasury bill, which is less risky. So let me start here. I started with a business. Okay, this is a business. I don't know if you can see this. The first one is, let me remove this. The first one is a business. So the second one, I say with these 200,000 shillings, you put it in a government bond because it's less risky. Or you put it in a money market fund because it's less risky. So with 200K, assuming now with a treasury bond, I'm just going to be using something like 14%. So this is a bond. With 14% coupon, you can make around 28K in a year. 28,000 in a year, every single year, depending on the duration of the investment. Again, we're going to talk about that. But at least with bonds, you can make 28K. For somebody who likes taking risks, for somebody who already owns a business, they can say that with this 200K, they can just reinvest it in their business, which will make them more than the 28K, assuming that it's a 14% bond. You see? the dynamics. If you take this 200K to a business that probably you're taking a risk for, if it works out, definitely it's going to give you more than the 28K that you're going to make from a bond. More than the 28K to, let's say, 30K that you're going to make from a money market fund, from a mutual fund, from a treasury, or rather from a fixed income fund. So that's another investment. So let me say mutual funds or unit trusts. So here we have MMFs, we have fixed income funds. Fixed income funds, you can't see this, but I'm mentioning them, fixed income funds. Yeah, so these ones are low risk, high risk. Okay, at least by now we have an idea of what we'll be looking out for with this 200K. Now, the other question that I would ask you if you have this 200K is, do you have an existing asset or investment already? For example, if you already own a piece of property that you make money from in terms of rental income, and that piece of property is not well furnished, let's assume that this time you have a house, or rather you have like a rental property with 10 houses, let's say 10 units, and you charge people, let's say 10,000 per month. So 10 units times 10,000 per month, that's 100,000 per month. So you make around 100,000 per month. But the reason why you charge these units 10,000 per month, it's because they're not well furnished. Like the roofing is not nice, the tiling is not that nice. What if you use this 200K to renovate that piece of property that you already have, such that you now start charging people more instead of the 10K that you charge them? If you do some renovations, you can start charging them double, 20K or 30K. So if you already have an existing asset, or another example, you have land that is just bare, it's not bringing in any cash flow. If it's land that can do farming, you can decide to use this 200K to diversify, or even 100K of this to start something like an onion farm, to work on the land such that that piece of land is going to bring you cash flow. If you already have a car and the car is not functioning well, perhaps you can use part of this to repair the car and then use the car for Uber, like such kinds of things. So do you already have an existing asset? If it's already bringing you some cash flow, then why not reinvest this on an already existing asset that has proved itself to bringing in cash? Or probably you may not want to do this because you want to diversify, then that's another story. Then the other question that I'd ask you is, how soon do you want your cash flow? How soon do you want your cash flow? Do you want to see your money making money every single month? Or are you patient enough to wait for a whole year to make that income once a year? So here we can talk about, in terms of cash flow, we can talk about real estate, investment trusts. We can talk about shares. So for these investments, they bring in cash flow once or twice a year. Yeah, REITs or shares. Well, for shares, if you sell your shares, if you know how to trade, then you can actually make more than that. But then again, if this 200K, you're doing it for the first time, these are risky investments. These ones are more risky than bonds and bills. I would not advise you to use your 200K to buy all of this, to do these investments, because one, it's going to take time for you to make cash out of them. Yeah. So if it's for the first time, you don't have any other source of income, let's say that you're not employed, then I would not advise you to do this, because this one is more risky and then it has to take time. And you can actually make more somewhere with this 200K. So all these dynamics come into play. With regard to cash flow, if you buy land, if you use this 200K, I don't know if it will be enough to buy a plot of land. Perhaps it is in some places. So let's say that you have this 200K and you're buying a piece of land. That land is going to be lying there, so it won't bring in any cash flow. Then if your aim is to make money every single month or once a year, then you have this land. It's not making money unless you lease it. Yeah. So here we're talking about physical assets. This one is 5, this one is 6. So we can talk about land and property. So in this case, it's land. With mutual funds, you can make cash flow every single month, and then like you get to see it. You get to see your interest. With bonds, you're going to be getting cash flow twice a year. This one is very critical. If you go for a business and the business does well, you do the marketing, you do the sales right, and everything that is related to a successful business, then you can be making your cash flow every single day. You can be making your cash flow every single month, depending again on the type of business. So this is something to look out for. Then the other question that I would ask you is, how soon do you want to see the return on your investment? What's the time frame? Going back here, for real estate investment trusts and shares, it's going to take you time, like a whole year, for you to get this cash flow. And if you are investing here with the aim of capital gain, like you're buying, or rather you're investing here, you have to wait like 2 to 3 years to see a return on your investment. It's the same thing with equity funds. So like 7 equity funds. REITs, shares, equity funds, and other investments, it's going to take time for you to see the growth or the value of your investment appreciate. It's going to take time. Also, with regard to time, we also talk about land. It's going to take time for you. It's going to take time for the value of that land to go up, so that when you make a sale, you win. So those are some of the things that come into play. MMFs, these ones are short term. These ones are long term, like long term oriented, medium term oriented. Again, bonds depends, but it's also long term. Bills are short term. So what's the time frame in which you want to see a return for your investment? That one will come into play. Then the other question that I would ask you, that you should ask yourself, is, what are your goals? I'll give an example. If your goal is to own a home and you have 200,000 Kenyan shillings, then this 200,000 Kenyan shillings, you might want to put it in something like a fixed income fund. You leave it there because you've determined that the cost for you to buy that piece of land to build your home is 500K, but you only have 200K. So you have to figure out how you're going to get the rest of the money, the rest of the 300K, so that you add that to 200K, such that it's enough to buy you a plot of land if the plot of land is 500K. I don't know if that makes sense. So what are your goals? This 200K might not be enough for you to buy the land. It may not be enough for you to build a house. If your goal is to eventually build a home for yourself, it may not be enough. So you have to take time to make more income through other ways. But in the meantime, you put it in a long-term investment, like a bond, or a short-term, like a fixed income fund, until you get the extra money that you need. If your goal is to buy a car and the car doesn't go for 200K, the car that you want goes for, let's say, 400K, then you have to save this 200K, put it in, let's say, a fixed income fund or a money market fund, and wait until you get the other 200K, which you can decide to save, which you can decide to make from employment, which you can also decide to take a loan for, and then you get the 400K, and then you pursue your goal. If your goal was to buy a car, if your goal was to build a house. So that's another critical question. With this in mind, you can see that I don't have like the best direct answer to answer you on where to put your investment, because it depends on several factors that are personal to you. Now, the other question that you might ask me is to do the math, like how does 200K look like in a business? The business depends. If it's a second-hand business, again, it has to depend with your sales, with your marketing skills. How much can 200K we make with a bond? If it's a 14% bond, then you can make around 28K every single year. If you're going to invest this for 5 years, then times 5 years, right? If it's a bill, the amount is going to be less than this 28K, depending on the interest rate. Again, I have to work out that. but I've done several videos on this, so you can actually check them out. There's also a calculator if it's the bill. If it's a money market fund, there's a calculator on my website. Just search Ivyoyori Money Market Fund Calculator. It's going to help you determine how much you can make with 200K in 1 year, in 2 years, in 3 years' time. Same with a fixed income fund. For real estate investment trust, it's also going to depend on the price of the share or the price of the unit. So then again, this one is more dynamic because you have to decide which shares you have to buy, and then there are different prices for the shares. So if it's equity share, if you want to buy shares from equity, the price is different. Again, we have to do the mathematics. You can see, that's why I'm telling you, you can see that's why it's not easy to like come up with some projections on the shares, because it depends on which shares you're going to buy. Then on land, again, is this 200K enough? If you can find a place where you can buy a plot of land with 200K, then probably you're going to see a return on your investment in 10 years' time, in 20 years' time, if the value of that land is more than 200K. Again, it's going to take time. So I can't like come up with a figure for that. Same with all these types of investment. So for us to figure out the best way to invest this, you have to look at yourself and assess yourself using these 6 criteria that I came up with. If you had this 200K, where would you invest it personally? Where do you think would be the best place to invest it? I'd love to know your thoughts on the comments. Like this video and see you in the next one.